The cereal in the aisle is standing on a blue pallet. That pallet is not the store's. It is not the cereal company's either. It was never sold to anybody, and it never will be. Somebody in another country knows roughly where it is, and is billing for every day it sits there. The paint is not decoration. It is a property claim. Start with the object because nobody has ever looked at it. A pallet is the most standardized thing in commerce. 48 inches by 40. Virginia Tech's Unit Load Lab puts about 1.9 billion of them in use in the United States. Almost all of them are exactly what they appear to be. Cheap wood, bought once, used until it breaks and ground into mulch. You own those. Nobody counts them. And then there is the blue one. Blue means it came out of a pool. The largest pool in the world belongs to a company called CHEP, which is owned by an Australian company called Brambles, and their business is not selling you a pallet. It is hiring you one over and over forever. Same plank of wood. Completely different ledger. White wood is a purchase. It hits the books once as an expense, and after that it is yours. Your storage, your repairs, your disposal problem. Blue wood is a hire. You never buy it at any price because it is not for sale at any price. You take it, you use it, and the meter runs the whole time you have it. So follow one. It is issued to a food manufacturer, and the issue is billable. It gets loaded and trucked to a distributor, and that handoff is billable. The distributor sends it on to a supermarket, and that transfer is billable too. And every single day it sits in anybody's yard waiting, it is on hire. Then it goes back to a service center where it is inspected, repaired if it needs repairing, and issued to somebody else. The wood lasts for years. The billing never stops. Nobody publishes a rate card for this. The best public picture of the bill is a trade journal breakdown from 2009, written by a former CHEP inventory manager. A $5 issue fee, 3.5 cents a day on hire, transfer fees at the handoffs, $7 to $10 all in for a single trip. Those figures are 17 years old. The shape is what matters, and the shape has not moved. You are not paying for the plank. You are paying for the time. Now multiply that by everything. As of the 30th of June last year, Brambles had 348 million pallets, crates, and containers moving through the world's supply chains, 750 service centers, about 60 countries. Last financial year, that pool brought in $6,669.7 million. Do the division yourself because they will not do it for you. Spread that across 348 million platforms, $19.17. Per platform. Per year, about 5 cents a day, that is the entire business. A nickel a day, 348 million times over. That division is ours, not theirs, and it spreads every dollar of revenue across the whole pool, crates and containers included. CHEP does not publish a rate card, which is a wonderful business, with one condition attached to it. A rental only works if the thing comes back. And a wooden platform worth roughly the price of a large pizza, sitting in a yard 4 countries from where it started, does not always feel like somebody else's property. So there is a line in the audited accounts for the ones that do not come back. It has a name. The irrecoverable pooling equipment provision. Brambles defines it, in its own published glossary, as a provision to account for pooling equipment that cannot be economically recovered, and for which there is no reasonable expectation of receiving compensation. Pallets that left and are not coming back. Last financial year, that line was $93.5 million. The year before, $185.5 million. The year before that, $285.1. Add up the last 5 years, and the provision for platforms that walked off comes to $994.4 million. Just under $1 billion in a line item for wood that did not come home. That is a large enough number that the independent auditors treat it as one of the hardest things in the accounts. Their report lists pooling equipment as a key audit matter and states the difficulty in plain words. The key area of judgment, they write, is the quantity of lost pallets, which means somebody has to go and settle it. The accounts describe how. Brambles conducts audits continually at its own plants, at customer sites, and at other locations. The equipment is counted on a sample basis and reconciled against the hire records. Right now, somewhere, a person is standing in a yard with a clipboard, counting pallets because a missing one is not a missing plank of wood. It is a missing annuity. We know what a leak costs because there was one. In September of 2003, Brambles told its shareholders it had mislaid more than 14 million pallets. 15 million pounds went on finding 4.5 million of them. Another 13 million pounds was written off against 4 million more that came back damaged beyond repair. 28 million pounds at that point. Full year profit before tax down 29% to 190 million. The company expected the worldwide audit to continue until June of 2005. 2 years. To count the pallets, which is why the modern version of this company looks less like a lumber business and more like a repossession service. There is a loss recovery fleet. There are about 4 million digitized pallets feeding back more than 1 billion data points a year, converted, in the company's phrasing, into insights. The insight being, where did they go? Last year, that effort recovered and salvaged about 25 million pallets, against about 16 million the year before. Uncompensated losses are down roughly half against the 2021 baseline. In Chile, they serialized an entire national market. 60,000 smart pallets, every one of them addressable, and the provision fell from 185 million to 93. The pallets did not get more loyal, the company got better at finding them. Underneath all of that technology sits one very old legal claim, printed on the wood itself. Property of CHEP. The company's position is that it never sells its equipment and never transfers ownership. So a blue pallet in your yard is not inventory, and it is not scrap. It is theirs wherever it happens to be. Or, as the company puts it in its own public notices, if it's blue, it belongs to CHEP. That claim gets tested. In 2024, in a New Jersey courtroom, CHEP sued a pallet dealer it accused of storing and reselling its property. Company representatives had walked the yards and counted between 1,500 and 2,000 blue pallets at each of 2 sites. The dealer's defense was the most honest sentence in the file. Shipping pallets, it argued, are constantly changing locations and owners, and there is no way to determine the rightful owner of a pallet once it enters the stream of commerce. The judge denied the motion to dismiss, and the case went forward on conversion, replevin, and unjust enrichment. 3 different ways of saying, that is ours, give it back. Nothing was proven that day. A judge decided the question was worth asking, so here's the arrangement at the bottom of the grocery aisle. You can own the cereal, the store can own the shelf. Somebody owns the building. The one object holding all of it up is hired by the day, from a company that has never sold a single one, counts them continually, and books the ones that vanish as a provision. Nobody designed that to be strange. It is what happens when the cheapest way to move everything is to own none of it. That is the face value. The ledger says otherwise. And if you want the other half of this story, the one about what it actually costs to bring an object back, once it is loose in the world, watch the one on why your return is not going back on the shelf.